just good that it's finally out of the way, because it's been hanging over us for a while. I think what's more significant is the detail in terms of what is mentioned going forward, and a somewhat dovish position there, which possibly suggests that there will be a couple more hikes, maybe, another 25 to 50 basis points over the course of the year.
Going forward also, we are expecting some gradual rate hikes from Federal Reserve.
Yeah.
How is that going to impact the fund inflows into India?
Yeah.
And foreign debt is also going to get more expensive for us.
I think what impacts us a lot more is currency and volatility therein, and how we can protect ourselves and the cover therein. And I think the view right now is that currency volatility is going to be fairly stable in terms of the way emerging markets see it. So if there's a belief that currency volatility over the next 12 months is not going to be extreme, I think the appetite of companies to borrow and the lenders to lend will be there. And yes, in view of interest rates going up in the longer term, the desire to borrow earlier should probably drive companies to access the market sooner rather than later.
At least in the winter session of Parliament, nothing is going to move on GST front because of political reasons. Yeah. How do you read this situation? Is it going to have a huge impact on the kind of growth path that we were anticipating earlier?
No, because the growth path for each sort of sector is dependent on what we do for that sector. The GST was going to be the icing on the cake on top of that, because we were
a catalyst for the entire economy.
Yeah,
isn't it?
Well, not so much a catalyst. Well, in that revenue collections would have gone up, and it would have eased some of the pressure on the fisc, because you'd have had more in the treasury to spend.
But fisc is obviously not a concern for the government right now because of the oil and commodity aspect.
Yeah, but on the other hand, don't forget that the accommodation we did last year was actually not adhere to the structured, 3.5% down to 3%. So the commitment to bring our fisc down to the 3% mark is also important to have. But I would rather see us give ourselves a little flexibility there in the interest of spending for growth, because I do think we need to bring growth back, and more so, as you rightly point out, because we won't get the additional kicker of GST, which we were all hoping for.
So all of this converging, is there a timeline that we are looking at this point?
I firmly believe that over the next couple of years, we will see this lift off. It's going to be gradual, but directionally, I have no doubt that we are seeing it. The GDP growth is on its way up. The growth for many sectors is on its way up. And we have to just ensure that we can do that quicker and faster.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.